This is Alan Bush with the Daily Financial Forecast for Thursday, January 6th. Stock index futures yesterday coming under quite a bit of pressure. This after the Fed releasing the minutes from their December meeting, indicating a much more hawkish tone. Now it looks like the Fed is on track to hike interest rates in March. So that was a bit earlier than some analysts had anticipated. Also, they may ramp up the taper of their asset purchase plan. So all in all, the Fed more hawkish than many had anticipated. However, today we are seeing futures mixed. Also, despite the more hawkishness from the Fed, I think that the fundamentals on balance still are bullish, despite what the Fed did do at their recent meeting. Moving over to the currencies, still seeing the dollar index and the euro currency trading in broad trading ranges, and I would expect this to continue for the near term. Still thinking that there are better opportunities in the long side of the British pound. Keep in mind that the Bank of England, in a surprise move last month, raised rates. They may raise again in February. Of course, that could be ahead of the Fed. So any breaks in the pound should be used as buying opportunities. By the same token, I think the Bank of Japan is likely to remain accommodative. I believe that is a recipe for lower prices for the yen. So any gains that we see in the Japanese yen should be used as selling opportunities. And in the interest rate futures markets, there were declines, of course, with the release of the minutes yesterday from the Fed. Keep in mind, though, that some analysts now are thinking that the Fed may be a bit too hawkish. The yield curve has actually flattened a bit since last March. That could be a sign of a slower rate of growth in the U.S. economy. So the Fed potentially could be aggressive in hiking rates at a time where the economy may be slowing. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.